Good day, everyone. Welcome to another video lecture for Intermediate Accounting 2. I am your instructor, Ms. Josel May Celarinos Del Monte. So in this video, the topic that we are going to discuss is all about the bonds payable. But the topics covered for bonds payable is very long, so it is impractical to include all the discussion in just one video. So I decided to divide it into two sections. The first part will be on this video and the second part will be on the next video. So let's start. So let us define first the bonds. So what is a bond? So bond is a formal unconditional promise made under seal to pay a specified sum of money at a determinable future date and to make periodic interest payments at a stated rate until the principal sum is paid. So take note that it is a formal, unconditional promise wherein the debtor is obliged to pay a specified amount of money, and that money includes the periodic interest payment and at the same time the principal on a determinable future date. So bond is opposite with shares, wherein shares is an example of an equity instrument, while bonds is an example of a liability or a debt instrument. So whoever issues the bonds is considered as the issuing corporation or the issuing entity, while the issuing entity also is considered as the debtor. While the party that is being issued with the bonds is considered as the investor, or somehow we call them as bond holders. So different siya sa bonds, or different si bonds sa shares. Kaya ang shares man, if you are the ones who holds the shares, you are so called as the shareholders. Pero pag bonds, you are the bondholder. And pag bonds pod, you are considered as the creditor. You're not you are an investor, but you are not an owner of the said entity, of the said issuing entity. Ang bonds, though you are an investor, but you are not an owner. You are just a creditor. Igo lang ka nagpautang ana sa issuing entity. Unlike sa shares of stocks or sa shares, if you are holding such shares, you are considered as owner. So another, bonds is a contract of debt whereby one party called the issuer borrows fund from another party called the investor. So two parties involved. The other party is the issuing party, issuing entity, who borrows funds from another party called the investors. Evidenced by a certificate and a contractual agreement between the issuer and investor is contained in a document known as Ban Indenture. So the document to support the transaction between the investor and the issuing entity is what is so called as the Ban Indenture. So there are different types of bonds that we can encounter, such as we have term and serial bonds. So these bonds differ as to the terms of payment. Because when you say term bonds, these are bonds with a single date of maturity. In layman's term, we call them or their payment usually is made on a lump sum basis, meaning kaisa lang siya. There's only one maturity date, kaisa lang nimo bayaran ang principal. Though ang principal is paid on a lump sum basis, but the interest is usually on a regular or a periodic basis. While serial bonds are those with series of maturity dates instead of a single one. So in layman's term, we call the payment, the mode of payment, as an installment, meaning tagi-tagi siya. Di lang siya kausahon pagbayad ang interest. Instead, it will be paid on an installment basis. That is serial bonds. Another types of bonds, we have secured and unsecured. So the difference between the two is or will matter on the security of the bonds. Okay, so we have mortgage bond. Mortgage bond is a secured bond because there is a corresponding mortgage, and that is mortgage on real property, meaning na ay collateral. Okay? So, si issuing entity, nag-collateral siya sa iyahang real property to the investor in exchange of the bonds issued. Okay? Next is collateral trust bonds. This is also a secured bond wherein the item that is being secured are the shares and bonds of other corporation, meaning mga investments. Okay? Investments ni issuing entity from the other corporation. So, katong mga naa sa investment in bonds or investment in equity securities. Then, debenture bonds. These are unsecured or bonds without collateral security. So, kaning first two, these are secured bonds, while debenture bonds, this is an unsecured bonds. Next, registered and bearer bonds. So when we say registered bonds, this require the registration of the name of the bondholders on the book of the corporation. If the bondholder sells a bond, the old bond certificate is surrendered to the entity and a new bond certificate is issued to the buyer. So meaning, every time if there is transfer or if there is a sale of the original bond, ang mahitabuan na the name that is being registered in the previous original bond will be deleted or will be changed into the new one who buys the particular bond. Okay, like say for example, Company A. Company A issued bonds to Company B. So, ang bond karon nakapangalan kay Company B as the bond holder. Now, if the bond will sell the bond nga iyahang gihold karon into another party like si Company C, so if that is a registered bond, mawala karon ang pangalan ni Company B as the registered name of the Ban Indenture, and then it will be transferred to Company C. So, ma-change siya from Company B to Company C. That is registered bonds. However, when you say coupon or bearer bonds, these are unregistered bonds in the sense that the name of the bondholder is not recorded on the entity's book. So, whoever or kinsa manggaling ang makagunit sa kung kinsa manggaling ang makagunit sa bond, siya gyud ang siya na mismo ang manag-iya sa kato nga bond regardless kung kinsa ang original nga buyer, if that is a bearer bond. Kay nga naman, because there's no specific name of the corporation or the bondholder that is being used or being registered in the bond certificate. So, pwede ra siya mapasa-pasa. Kumbaga, it is called as or it is described as transferable. Okay? Transferable siya nga bond certificate. Other types of bonds, we have convertible bonds. These are bonds that can be exchanged for shares by the or shares of the issuing entity. So, convertible bonds from the word itself, initially it is issued with bonds, but subsequently, the bondholder may convert the bonds into shares of stocks of the issuing entity. In effect, pag ma-convert na siya, the bondholder will become a shareholder. Next is callable bonds. These are bonds which may be called in for redemption prior to maturity bond. Diba? Pag ang bond is there a specific date, there is a maturity date. However, sometimes, there were bonds nga prior to its maturity, pwede na siya bawion, pwede na siya i-redeem. It's either on the discretion of the issuing corporation or on the discretion of the bondholder. So that is callable bonds, meaning i-pull out na siya before its maturity. Guaranteed bonds, these are bonds issued whereby another party promises to make payments if the borrower fails. Okay, that is fails to do so. So guaranteed meaning na ay co-maker. Okay? So, say for example, if the original bondholder or the primary bondholder is a Company B, and then naa siya co-maker si company C, and if that is a guaranteed bonds, in such a case that company B fails to pay the obligation, then the issuing entity can go after with company C because that is guaranteed bonds. We also have junk bonds or high-risk, high-yield bonds issued by the entities that heavily indebted or otherwise in weak financial condition. So, katotong mga these junk bonds can be described to the bonds issued by a corporation with a weak financial condition. So, junk bonds na to. So, kung ikaw investor sa kana nga entity with a weak financial condition, so you really took the risk on investing that particular bonds. Zero coupon bonds, these are bonds that pay no interest, but the bonds offer a return in the form of a deep discount or huge discount on from the face amount. So, even though that there's no interest, okay, pero ang iyahang principal daw may be discounted. Okay? The face amount of the bonds is discounted. So, what are the features of bond issue? Okay, so natay when there is an issuance of bonds from an issuing entity to an investor, so may mga kasagaran nga available like documents. Okay? Or the process mismo. So, we have a Ban Indenture or deed of trust. It is the document which shows in details the terms of the loan and the rights and duties of the borrower and the other parties of the contract. So, kumbaga, this will serve as the contract between the issuing entity and the investor. So, naadari ata na ng ilahang mga agreement. Okay, terms of the loan, rights and responsibilities of all the parties involved. Then bond certificate. Bond certificates are used. Each bond certificate represents a portion of the total loan. So, sama sa klasa shares of stocks, natin ginatawag na par value pod. Okay? Par value for the bonds. And usually, ang minimum par value or the minimum denomination of the bond is 1,000. So, say for example, if 4,000 bonds ang gi-issue sa isa ka investor or gi-issue kang investor, then the denomination is 1,000. So, the total investment is 4 million. That is 4,000 times 1,000 na denomination. So, that is supported with a bond certificate. If property is pledged as a security for the loan, a trustee is named to hold title to the party serving as security. The trustee acts as the representative of the bondholder and is usually a bank or trust entity. So, if naaday property nga gi-pledge, so there will be an assigned trustee who will act or who will manage the securities of the bondholder. Then, a bank or trust entity is usually appointed as registrar or disbursing agent. The borrower deposits interest and principal payments with the disbursing agent who then distributes the fund to the bondholder. So, in this case, there's no direct contact or direct flow of the cash flows from the issuing entity to the investor. Instead, moagi sa siya og disbursing agent. So, kumbaga, ang issuing entity karon or si borrower will pay to the disbursing agent, both the principal and the interest. And then, after that, the disbursing agent will be the one who will pay to the investor. So, napa siya middleman. Okay, so contents of Ban Indenture. So, mga just read those items included in the Ban Indenture. Okay, so now let's proceed with the sale of bonds. So, paano mag-issue ang entity, ang isa ka issuing entity when there is a sale of bonds? So, again, as I've mentioned earlier, that in a bond certificate, or the supporting document of the bondholder nga nagpamatuod nga naa siya investment sa kaning entity in the form of bonds. So, di ba nato corresponding denomination? And that is usually 1,000 each bond. So, murag mo na iyahang par value, 1,000 par value. So, if, say for example, if the bondholder holds 50,000 bonds and each bond is 1,000 pesos, so 50,000 times 1,000, that is 50 million. Now, the entire bond issue is sold to an underwriter or investment bank that assumes responsibility for reselling the bonds to investor. So, kasagaran class, wala gyud direct nga transaction between the issuing entity and the bondholder. Instead, na siya ginatawag nga underwriter or the middleman. So, kumbaga, ahente ba? Ahente. Okay? So, kinsa man to mga ahente. So, these are investment banks. Okay? So, sila ang nagapangita og, say for example, if an issuing entity is looking for an investor, so si investment bank ang mangita karon og mga investors. So, siya na karon ang makig-negotiate didto kang sa mga investors. And then, of course, when the bonds is officially sold or is closed for sale na siya, then the underwriter will do everything or will do the negotiation process or the transaction process. When an entity sells a bond issue, it undertakes to pay the face amount of the bonds issue on maturity date and the periodic interest. So, after the sale of bonds is done, of course, now the issuing entity is already obliged to pay interest and the principal on a specific date. Depende sa iyahang maturity date. Interest is usually payable semi-annually or every 6 months. Like say for example, kung semi-annually, twice magbayad og interest. So if the interest payment is on the first interest payment of the year is January, then the second interest payment will be on July, 'di ba? If February ang first interest payment, then the second interest payment will be on August. Okay, so man na siya semi-annually. But of course, when the entity, the issuing entity and the bondholder agrees to pay interest on an annual basis, then there's no problem. But again, usually interest payment is payable every 6 months or semi-annual. So, how do we measure the bonds payable? So, what is the initial measurement of the bonds payable? So, according to the standards, bonds payable not designated through profit or loss shall be measured initially at fair value minus transaction costs that are directly attributable to the issue of the bonds payable. Again, itong keyword diri bonds payable not designated at fair value through profit or loss. So, what are those other investment? Okay, investment securities, designation of investment securities, we have fair value through profit or loss, designated at fair value through profit or loss, designated at fair value through other comprehensive income, and then we also have designated at amortized cost. That is for bonds. So, tulo siya kabuok. Again, fair value through profit or loss, fair value through other comprehensive income, and at amortized cost. So, 3. Okay, tulo ka classification. Here, in the standard, ingon siya diri tanan daw nga bonds payable not designated at fair value through profit or loss. So, meaning katong duha, if the bonds is designated at fair value through other comprehensive income or designated at amortized cost, that or the said bonds payable shall be initially measured at fair value minus transaction cost. Okay? So, kung ano siya no, kung designated at fair value through other comprehensive income and at amortized cost, it should be measured initially at fair value minus transaction cost. Now, what if, okay? Ma'am, what if designated at fair value through profit or loss siya? then the initial measurement will be at fair value. So there's no need to deduct the transaction cost. Okay, so timanan na siya ha. Now, the fair value of the bond is usually equal to the present value of the future cash payments to settle the bond liability. So, what includes the future cash payment? Of course, we have the principal payment and the interest payment. So, you just get the present value of those payments, then that will be the fair value. Bond issue cost, that is the transaction cost. Okay? I-deduct siya sa fair value or sa issue price. Now, issue price could also be the fair value of the bond. Again, as I've mentioned earlier, that if the bonds payable is designated at fair value through profit or loss, the bond issue cost will be expensed immediately. Nga naman, ang measurement lang niya will be at fair value. So, treatment for the transaction cost or the bond issue cost, that shall be treated as expense immediately if at fair value through profit or loss. However, if the bond is not designated at fair value through profit or loss, such as fair value through other comprehensive income or amortized cost, then bond issue cost is deducted from the fair value. Now, subsequent measurement of the bonds. Subsequently, after recognition, bonds payable shall be measured either at amortized cost using the effective interest method and at fair value through profit or loss. Okay, so kaning fair value through profit or loss, subsequently, there must be evaluation of the fair value, and any changes in the fair value of the investment or the bonds shall be reported in the profit or loss. Well, the first item, amortized cost, so ano ni siya, kanang we will be using the effective interest method. If there are premiums or discount on the issuance of the bonds, then kailangan siya i-amortize. Okay, amortized cost of the bond. Okay, how do we determine the amortized cost of the bonds payable? So, amortized cost of the bonds payable is the amount at which the bond liability is measured initially minus the principal repayment plus or minus the cumulative amortization using the effective interest method of any difference between the face amount and the present value of the bonds payable. Okay, so isa ko na to ha. When we get the amortized cost, we will start with the initial measurement of the bond liability. So how do we measure initially the bond liability? Okay, that is fair value less transaction cost. Okay, so mana yung initial measurement. Then after that, i-minus ang principal repayment. Okay, so i-minus ang principal repayment. Then, minus or plus or minus the cumulative amortization using the effective interest method of any difference between the face amount and the present value of the bonds payable. So, this one, difference between the face amount and present value of the bonds, we are talking about here the discount or premium. So, whatever the discount or premium, i-amortize na to siya, then ato siyang i-add or i-minus. So, asa man ang i-minus na to? Ang i-minus na to will be amortization of premium. Okay? Ang i-minus na to is amortization of premium. Ang i-add na to kay amortization of discount. Okay? Again, ang i-add na to will be the amortization of discount, while ang i-minus nato will be the amortization of premium. So, accounting for issuance of bonds. So, there are two approaches in accounting for issuance of bonds. We have Memorandum Approach and Journal Entry Approach. So, the only difference in these approaches will be accounting for the authorization issuance of bonds, if there are authorizations and issuance of bonds. For journal entry, there will be a journal entry provided when there is authorization and issuance of bonds. However, for memorandum approach, on the authorization of bonds, only memorandum entry will be reported or will be included. Okay? Issuance lang ang naay proper journal entry for memorandum approach. So, in this case, we'll just focus on the memorandum approach because practically, memorandum approach ang ginagamit siya. Okay, so we have illustration, January 1, 2020. The entity is authorized to issue 10-year, 12% bonds with face amount of 5 million. Interest payable January 1 and July 1. So, twice siya a year ang interest payment. Consisting of 6,000 units of 1,000 face amount. The bonds are sold at face amount to an underwriter. Okay? 6,000, I think this is class? This should be 5,000. Okay? This is not 6,000, rather it is 5,000. So, consisting of 5,000 units of 1,000 face amount. That is why the total face value is 5 million. 5,000, okay, this is 5,000 times 1,000, that is 5 million. So, how to record this one? Take note that the bonds are sold at face amount. Okay, so this one, this would be the memorandum approach. So, in the memo entry, this is 5 million, okay? 5 million gini siya. 5 million na face amount ang authorized for issue. And then, interest payable twice a year, consisting of 5,000 units and of 1,000 face amount. So, say for example, if nabaligya na siya, na-issue na siya ang bonds, then to record the sale of bonds at face amount, debit lang cash and credit bonds payable for 5 million. Okay, for journal entry approach, nag-record siya og entry on the authorization and at the same time, napod siya entry to record the sale of bonds. Again, we'll just be using the memorandum approach. Okay, so now, sometimes, the bonds may be issued at premium. Okay, again, the bonds may be issued at premium and sometimes also, pwede po siya ma-issue at discount. So, let's start with issuance of bonds at a premium. So, kanus man nga na ay premium ang issuance of bonds. That is when, if the sales price is more than the face amount of the bonds, there is premium. Again, pag mas dako daw ang selling price kumpara sa face amount, there is a premium. For example, an entity issued bonds with face amount of 500, this is 5 million. Okay, that is not 500,000. That is 5 million. 5 million at 105. So, the 105 there represents the issue price. Okay? Issue price niya, meaning the bond will be issued at 105% or yahang quoted price. So, the quoted price of 105 means 105% of the face amount. Thus, the sales price is 5,250,000 computed by multiplying 105% by 5 million. So, since ang selling price is 5,250,000, which is greater than the face amount ng 5 million, then there is said to be a premium. And the premium is 250,000. So, to record, debit, cash, equal to the total selling price, 5,250,000, credit bonds payable 5 million, and credit premium on bonds payable 250,000. Okay? So, inana siya. That is premium. Now, what is the nature of the premium? The bond premium is in effect a gain on the part of the issuing entity because it receives more than what it is obligated to pay under the terms of the bond issue. Kaya suppose sabi, ang bond lang man, the value of the bond is 5 million. But the bondholder or the investor pays more than what is intended to. Okay, more than 5 million. So, nagul siya ginansya. The bond, however, or the bond premium, however, is not reported as an outright gain. So, ginansya siya, pero dili siya i-recognize as an outright gain, which will be reported in the income statement. When the bonds are sold at a premium, it means that the investor or the buyer is amenable to receive interest that is somewhat less than the nominal or stated rate of interest. Okay, so katong ginansya nga to ang gi-expect on the sale of or on the issuance of the bond is not really an outright gain. Rather than, it means to say that the investor is willing to receive in the future an interest that is less than the actual interest. Okay, that is less than the nominal or stated rate of interest. Thus, in such a case, the effective rate is less than the nominal rate of interest. Now, later on, if we are going to amortize this premium, we will be using an effective rate. Okay? So, ang effective rate daw pag premium class is lesser or is less than the nominal rate. So, timana na siya ha. Pag premium, ang effective rate is less than the nominal rate. Why less than ang effective rate kaysa sa nominal rate? Because, of course, the buyer or the investor is willing to give or to receive. Okay? To receive interest that is somewhat less than the nominal or stated rate. So, the amount nga ma-receive na interest willingly by the investor is equivalent to the effective rate. That is why mas gamay ang effective rate kaysa sa nominal rate. That is the gain. So, nominal rate is the rate appearing on the face amount of the bond certificate, which that interest or which the issuing entity periodically pays to the buyer or the bond holder. So, ang ma-receive yun sa bondholder will be equal to the nominal rate. But the effective rate will determine how much is the actual rate na ato ang gibayad. Okay? Considering the time value of money. Again, the effective rate will determine how much is the true interest that we actually pay to the bondholder. Okay? Because of the relationship of the premium to the interest, the bond premium is amortized over the life of the bonds and credited to interest expense. So, after which, the premium will be then amortized. And then, the bond premium is amortized over the life of the bond, over the maturity of the bond, and credited to interest expense. Okay? Again, any amortization of the bond premium will be credited to interest expense. Now, say for example, our premium on the bonds payable is 250,000. And assuming that 10 years ang maturity sa bond, so we need to amortize the bond premium over a 10-year period using straight line method. So, as simple as the straight line method. So, i-divide lang nato siya. 250,000 divided by 10 years. So, every year, your premium amortization is 25,000. So, debit, i-close nato siya sa premium on bonds payable and credit interest payable. So, 25,000. Next is issuance of bonds at a discount. So, kabaliktaran sa premium, if the sales price of the bond is less than the face amount, then that there's said to be a discount. So, kumbaga, kung ang discount or kung ang premium it resulted to a higher selling price than the face amount, kani ang discount resulted to a lower selling price compared to the face amount. So if you notice, ang premium is a credit or credited, okay, together with the bonds payable, but here ang discount is debited. Okay, so i-debit siya. So debita og cash equal to the selling price, which is at 95%. So 4,750,000. Then the discount is 250,000. So i-debit na to siya. Discount on bonds payable 250,000. And credit bonds payable at par value or at face value 5 million. Now, unlike sa premium, bond discount is in effect a loss to the issuing entity. However, again, it is not treated as an outright loss. Meaning, dili na nato siya directly i-report sa profit or loss. When bonds are sold at a discount, it means that the buyer or investor is not willing to accept simply the nominal rate of interest. So, meaning they really want more than what they are going to receive, what they are actually to receive. Okay? Kaya again, the nominal rate represents the interest nga ilahang mabayad, but they want it more. Okay? So, gusto sila mas dako pa ato. So, that is why discount siya. Now, the buyer wants to accept a rate of interest that is somewhat higher than the nominal rate. So, that's the meaning of that. Thus, when the bonds are issued at a discount, the effective rate is higher than the nominal rate. So, unlike kaganiha sa premium, effective rate is lower than the nominal rate. While if discount siya, the effective rate is higher than the nominal rate. Now, if there is a discount, same with the premium, kailangan siya i-amortize over the maturity period. However, it will be debited or charged to interest expense, meaning additional interest expense siya. Okay? Again, kung kaganiha ang premium credited to interest expense, in effect, that is a decrease in the interest expense. Karon, ang amortization sa discount, charged to interest expense, meaning additional interest expense. So, if i-amortize nato siya over 10 years, there will be 25,000 nga annual amortization. So, entry nato, debit, interest expense, and credit, discount on bonds payable at 25,000. Presentation of discount and premium. Discount on bonds payable and premium liability on bonds payable are reported as an adjustment to the bond liability account. Now, the discount on bonds payable is a deduction from the bond payable, and the premium on bonds payable is an addition to the bonds payable. So, meaning, when we are going to present those items in the statement of financial position, the discount on bonds payable will be shown as a deduction, meaning i-minus siya sa bond payable. While ang premium on bonds payable is an addition or i-add siya sa bond payable. So whatever the difference or the total will be considered as the carrying amount of the bonds. So if discount siya, the carrying amount of the bond will be bond payable less discount. For premium, the carrying amount will be bonds payable at face amount plus the premium. Okay, so say for example, okay, katong kaganihan nato no before the amortization of the discount and premium. So ang discount is shown as a deduction, while ang premium is shown as an addition to the bonds payable. So next is bond issue cost or the transaction cost. Okay? So kato ni siya if the bonds are not designated at fair value through profit or loss, this transaction cost is deducted from the fair value. Okay? So what is bond issue cost? Bond issue costs are the transaction costs directly attributable to the issue of the bonds payable. Meaning, when you say directly attributable, the issuance of the bonds will or cannot be done or cannot be successful or cannot be performed without this corresponding issue cost. Okay? Or shall I say, this cost can be avoided, or this cost is avoidable when there is no issuance of the bonds. Examples of such costs are printing and engraving cost, legal and accounting fees, registration fees with regulatory authorities, commission paid to agents and underwriters, and similar charges. So again, under the standard, bond issue cost shall be deducted from the value or issue price of the bonds in measuring other initially the bonds payable, or again, this is deducted from the fair value in measuring the bonds payable, not designated at fair value through profit or loss. Under the effective interest method of amortization, issue cost must be lumped with the discount on bonds and netted against the premium bonds payable. So may pasabot ani. Kaning discount or bonds payable, they cannot occur simultaneously. Isa lang yun na sila. Okay? Kung dili discount, premium. Kung dili premium, discount. Pero, ang bond issue cost, pwede siya musabay sa either discount or premium. So, say for example, discount no, and then napoy bond issue cost. How you are going to treat the bond issue cost when there is a discount? So, pag naday discount, i-add daw ang bond issue cost sa discount or i-lump nimo siya. Pero kung ang kapartner sa bond issue cost is premium, then i-net nimo siya sa premium. Meaning, i-minus nimo siya sa premium. Okay? So, ang bond issue cost, i-minus nimo sa premium on bonds payable. Again, if the bonds are measured at fair value through profit or loss, then the bond issue costs are expensed immediately. Accounting for interest expense on bonds requires recognition of two items. Okay, so here we are now on the recording interest on the bonds. So, unsa man to mga necessary nga interest expense that we are going to record. Okay, so first is payment of interest during the year. Okay, so we will record or the total interest that we are going to report or recognize within the whole year are, again, the payment of interest made during the year, and letter B, the accrual of interest at the end of the year. So, may tabo lang ni siya if there is a portion of the interest that needs to be accrued at the end of the year. Okay. So, say for example, on March 1, 2020, the entity sold bonds with face amount of 5 million and 12% interest payable semi-annually on March 1 and September 1. Inasmuch as the bonds are sold on March 1, 2020, the first payment interest will be on September 1. Okay, so the interest dates are March 1 and September 1. And of course, on the same date, March 1, mapod ang issue date. Okay, issue date or issuance date sa bonds. So, since March 1 man ang issuance date sa bonds, the first payment of interest will happen on September 1. And the next interest payment will happen on March 1 of the following year. Okay. So to record the entries or the related interest expense on this problem. So on September 1, we are going to record the first interest payment. That is debit interest expense and credit cash for 300,000. How did we get the 300,000? The interest rate is 12%. Okay? So, take note that this 12% is an annual rate. So, since ang September 1, ang madawat lang nato sa September 1 will be semi-annual interest lang niya. So, meaning half a year lang sa. So, kaning 12%, 6% lang usang madawat nato on September 1. So, 6% times 5 million, that is 300,000. The other 6% will be received on March 1 the following year. Okay? So, kani siya, tama ni siya, no? September 1. So, entry nato is debit, interest expense, and credit cash, 300,000. For December 31, though there's no payment yet for the second interest or second semi-annual interest niya, however, after the first payment September 1 until the end of the reporting period, there are already interest that were accrued. Okay, 'di ba? Sa accounting, under man na sa concept nga accrual basis, no? Even if there's no payment yet, for as long as that such expense is already incurred, so kailangan na to siya i-recognize. So same with the interest. So from September 1 to December 31, there's already an interest that was accrued. So kailangan na to siya i-recognize. So pila man ang na-accrue niya? So pila ka month? Okay, so from September, October, November, December. So there are 4 months that were accrued. So September to December, 4 months ana niya is computed as 5 million times 12% times 4 over 12, that is 200,000. So entry, debit interest expense for 200,000 and credit accrued interest payable for 200,000. Well, actually, this interest nga gi-accrue nato will be received the following year, pagka March. Again, gi-accrue lang nato siya kay tungod na may interest nga na-incur. So, what will happen the following year? Pag March 1. Okay? Before March 1, January 1 sa ta, there will be reversing entry that will happen. Diba? Diba? Sa basic accounting nato, unsa man ang gina-encourage nga i-reverse. So, tanang mga accruals, okay? Accrued expenses that is included. So, since atong gibuhat is nag-accrue man tag interest expense, so pwede siya i-reverse. So, pag reverse na to ana, entry, i-reverse lang ni siya. Okay? So, entry, debit, accrued interest payable, and credit interest expense for 200,000. Kaya para pag-abot sa March 31, okay, so para wala na tayo tracing, pila na lang ato ang interest expense. Kaya tanang madawat nato, or tanang mabayaran nato, or mabayad nato nga interest, will be charged to interest expense. Okay? Pwede ra pod kung dili mo mag-reverse, okay? Kung dili mo mag-reversing entry pagka January 1, your entry on March 1 will be debit accrued interest payable for 200,000, then debit also interest expense for 100,000, the remaining or the balance, and credit cash for 300,000. Still the same. Ang amount nga ma-report as interest expense as of March is 100,000. Okay. On September 1, that will be the next interest payment na pod. So, entry na to, debit, interest expense, and credit cash for 300,000. The same thing will happen on December 31. Mag-accrue gihapon ta og interest. Okay? So, next will be issuance of bonds on interest dates. Okay? On June 1, 2020, an entity issued bonds with face amount of 5 million at 97. Okay, what do you mean by issuance of bonds on interest date? Meaning, the issuance date, okay, the issuance date of the bond is the same as the interest date. Okay? Tingbayad sa interest. So, say for example, if the interest date is June 1 and December 1, the issuance date is also June 1. So, na-fall siya within the interest date or na-fall siya on the interest date nga June 1. Okay? The bonds mature 6 years and pay interest semi-annually on June 1 and December 31. Now, the straight line method is used for simplicity in amortizing discount or discount on bonds payable. So here, if you notice, the issuance of the bond is at 97, meaning less than 100. That means the bond is issued at discount. Okay, so it is issued at discount. The maturity period is 6 years. The interest rate, the nominal rate is 12%. So, journal entry na to record on June 1. How much is the discount? Well, the issue price is 4,850,000. That is 5 million times 97%. Okay? 5 million times 97%. That is 4,850 versus the face amount ka 5 million. Therefore, naatay discount nga 150,000. Okay? So, entry, debit cash, credit or debit, discount on bonds payable, and credit bonds payable. On December 1, there was an interest payment. Okay? Ang rate is 12%, no? Annual rate. Therefore, the semi-annual rate is 6%. 6% of 5 million, that is 300,000. So, interest payment during December 1 is 300,000. So, entry, debit cash, debit interest expense, and credit cash for 300,000. And for December 31, there will be interest. Okay? The interest nga i-accrue na to. Since ang next interest payment will be on June 1. However, during the month of December of year 2020, na-accrue nga interest. And that is equivalent to 1 month only. So, 1 month lang, we have 5 million times 12% times 1 over 12. That is equal to 50,000. So, next is, before we proceed to the next year, atong buhaton sunod is amortization of the discount. Okay? So, di ba, pag mag-amortize tag discount, when there's an amortization of discount on bonds payable, it will be charged to interest expense. So, mag-debit tag interest expense and credit the discount. Now, how do we compute the amortization? Okay. So, ang maturity niya is 6 years. Right? So, 6 years, the total pagani ka ng discount is 150,000. Okay? So 150,000, so that will be amortized over 6 years. However, for the year 2020, dili siya full year, di ba? Kay nag-start laman ta og June 1. So we'll just amortize for 7 months. Okay? 7 months lang siya. That is why ang iyahang annual amortization is 30,000. That is 150 divided by 6. 6 years. Tama ba? 150,000 divided by 6 years. Okay, dapat ano lang di ay siya. Wait. Okay, 5 years, 6 years. 150,000 divide 6 years. We have 225,000 times 7 divide 12. Feeling ako kay kuan niya siya class, 5 years lang ni siya. This is not 6 years. Okay, the bonds mature 5 years. Okay, ato lang yung sabon hapal. Yan na to i-change ang yung figures. So, 5 years ni siya ha. So, instead nga 6 years, 5 years lang siya. So, annual amortization for 5 years, that is 30,000. And then, 7 months lang man. So, times 7 over 12. Therefore, the amortization for 7 months is 17,500. So, entry, debit interest expense and credit discount on bonds payable 17,500. Okay, for the next year, the same lang gihapon, no? Nag-reversing entry siya. And then, pagka June 1, nag-record siya sa interest payment and at the same time, December 1. And pagka 31, nag-record siya sa accrued interest. And of course, on the same date, nag-record siya amortization sa discount. May, continuous ni siya. Magbalik-balik lang ang entry ani until the last day or last year sa iyahang maturity period. So, if the statement of financial position is prepared on December 31, 2021, okay, the accrued interest payable of 50,000 is classified as current liability, while the bonds payable shall be classified as non-current liability and will be shown as, or will have a carrying amount of, okay, 4,897,500. That is face amount ka 5 million minus the balance of the discount on bonds payable. So, giyon sa man ipagkuha ning 102,500. Okay, let's take a look back on the previous entries. Sa 2020, ang atong amortization is 17,500. Plus, amortization nato sa 2021 nga 30,000. So, all in all, ato ang accumulated na amortization after as of 2021 is 37,500. So meaning, if you have already amortized 37,500, how much will be the balance of your discount on bonds payable? Okay? So that is dili siya 37,500 kundi 47,500. So, if 47,500 ang na-amortize na, then the balance is 102,500. So, money siya diri. Okay? So, i-minus lang siya. Since discount man, no? Discount is shown as a deduction from the bonds payable. So, this is your carrying amount. Next is, what if the issuance of the bond happened between interest date? Say, for example, the interest date is January and July 1. Okay, every January 1 and July 1 of the year. But the issuance happened April 1. So, between siya sa interest date. Okay? So, what will happen? On the issuance date, atong timanan ani, on the issuance date, aside sa issue price, okay, issue price nga ma-receive ni issuing entity, maka-receive pud siya og accrued interest. Okay? Ang ma-receive niya nga accrued interest will cover from the previous nga interest date until the issuance date. Say for example, the last interest date was January 1. So, ang ma-accrue sa iyaha is from January 1 to April 1 nga interest. So, again, ang total nga ma-receive karon sa issuing entity from the investor will include the issue price plus the accrued interest from the last interest date until the issuance date. So, issue price, in this example, the issue price is 5,228,000. Okay? This will include plus pa ni siya sa accrued interest. So, accrued interest is computed as, ang ma-accrue lang ani nga bulan is 3 months. from January 1, which is the previous interest date, until the issuance date ng April 1, so that is 3 months. So 5 million times 12% times 3 over 12. So we have accrued interest of 150,000. So all in all, the total cash received by the issuing entity is 5,378,000. So entry, debited cash equal to the total cash received by the issuing entity, 5,378,000. Credit, bonds payable, 5 million. And since the issue price is higher than the face amount, so the bonds is issued at premium. So there's a premium of 228,000. Credit, interest expense, 150,000. Okay? So why is it interest expense, credit? Because later on, this will have an effect on the total expense nga ato ang ma-receive, ato ang mabayaran dito sa ato ang investors on the interest date. Okay, normally, when the bonds are issued between interest dates, the accrued interest is paid by the buyer or investor. Okay. Now, basi matingala mo, why is it nagbayad? Okay, nagbayad si investor og interest aside sa issue price sa bonds. It is because what will happen in the next, when the first interest payment will happen, ang ibayad karon ni issuing entity kang investor nga interest will be the full interest. Okay? So, ang full interest karon ang ibayad ni issuing entity ngadto sa investor. So, ang maitabuan na karon on the issuance date magbayad sa si investor kay issuing entity sa interest. Pero dili magka-problema or dili mag-worry si investor kay tungod iuli ra man gihapon na siya ni issuing entity padulong sa investor when the first interest payment will happen. Kay ngano buo nga interest ang ibayad ni issuing entity ngadto sa investor. So kani siya nga process, accounting process kas or procedure, this is for convenience purposes and also for traceability also of both the issuing entity and the investor. Pero kung atong buto naon, ang nabayad lang gyud or ang mabayad lang gyud ani net mabayad karon ni issuing entity nga interest ngadto kang investor is actually the interest na cover from the issuance date hangtod sa first interest payment. Pero again, kani siya ang manner sa or ang procedure sa pag-record ani is for convenience purposes. Okay? And also for tracing purposes pod. So, pag-abot sa July 1, which is the first interest payment, again, as I've mentioned earlier, nga the total or the full interest, the full 6 months interest ang ibayad ni entity, ni issuing entity dito akang investor with a total amount of 300,000. But again, actually, ang na-receive lang yun ni investor ani is net of 150,000. Yan naman. On the issuance date, di ba nagbayad si investor o 150 as an advance interest. But on July 1, on the first interest payment, gibalik ramang gihapon ni issuing entity ang katong gibayad niya nga 150,000. Therefore, ang net lang gyud nga interest income ani sa investor is the difference, 150,000. So another approach for the interest accrued, pwede ra siya i-credit sa interest or accrued interest payable. And then when the first semi-interest payment happens, the way that we are going to record the first payment will be as follows. So debit Accrued interest payable, 150,000. Debit interest payable, interest expense, 150,000. And credit cash at 300,000. Okay. Continuing the illustration, on December 31, 2020, adjusting entries are as follows. So first is to record the accrued expense, accrued interest expense. The last interest payment happened was on July 1. So from July 1 to December 31, though ang first payment, next payment will happen on January 1, still we need to accrue interest from July 1 to December 31. That is for 6 months. So, ang 6 months nga accrued interest ana niya is 300,000. So, entry, debit, interest expense, credit, accrued interest, payable. The next adjusting entry will be the amortization of bonds, premium on bonds payable. Pila ganito yung premium on bonds payable? Initially, we have 228,000. Now, the maturity is 5 years. Now, the question is, how many months or how many years do we need to amortize this 228,000? Is it necessary to amortize it for 5 full years or less than 5 years? Now, the answer is, we will amortize the premium starting on the date of amortization, okay? On the date of amortization until the maturity date. Now, kaning 5 years, nagsugod ni siya sa date of the bonds. Okay? When the date of the bonds is January 1, 2020. So, dira nag-start ang counting sa 5 years. But take note, the issuance of the bonds happened on April 1. So, meaning, dili na gyud siya full 5 years. Nakuhaan na siya og 3 ka bulan. Kay kaning 5 years, nagsugod siya sa date sa bond, which is January 1, 2020. But take note, ang atong amortization sa bond premium or discount will start from the date of issuance, regardless kung kanusa ang date sa bonds. So, meaning, kaning April 1, 2020, dili na siya full 5 years. Pila naman ka bulan ang naglapse ani? That is 3 months. So, meaning, we are going to amortize the 228,000 premium for 4 years and 9 months only. Dili na full 5 years. Kaya ang full 5 years, appeal diri atong period nga idle ang atoang bonds. Okay? Meaning, appeal tong prior sa issuance sa bonds. So, meaning, again, we will amortize the 228,000 nga premium for 4 years and 9 months. That is equivalent to how many months all in all? 4 times 12, that is 48 plus 48 plus 9, that is 57. Okay, 57 months. So, we will amortize the 228,000 by 57 months. So, meaning, 228,000 divided by 57. So, monthly amortization nato is 4,000. And since from the date of issuance until the reporting date of December 31, 2020, ang last day sa 2020, that is 9 months. So, total amortization for the year 2020 is 36,000. Take note, 9 months lang siya, no? Kay 9 months lang man gikan sa date of issuance padulong sa end of the reporting period. 36,000. So, entry, debit, premium on bonds payable, and credit interest expense for 36,000. Okay? Financial statement presentation. So, how do we present the financial how do we present this bonds in our financial statement? So, if a statement of financial position is prepared on December 31, 2020, The accrued interest payable of 800,000 is classified as current liability. The bonds payable should be classified as non-current. So we have bonds payable at face amount 5 million plus the premium and bonds payable 192,000. This is after deducting the amortization nga 36,000 from 228,000 minus 36,000. So the balance is 192,000. So carrying amount is 5,192,000. Okay, so we'll just stop here. Okay, mag-end na sa ta diri ang discussion class, and I will just continue the discussion in my next video. So thank you so much for watching, and I hope that you will watch it all over again for you to be able to master the basic concepts of the bonds payable. And I hope that you will find time also to watch in the subsequent videos that I will send to you in relation gahapon sa bonds payable. So again, thank you so much and have a good day.